Hello and welcome to Money News on Newsmax TV. I'm John Bachman. Joining us right now via Skype is David Gurwitz. He is a managing director of Charles Nenner Research. And David, as always, it's great to have you back with us.
John, it's always a pleasure to speak with you.
All right, I want to take a look at this tapering, the news everybody's kind of paying attention to right now, and what it's going to mean as we look ahead to some of the asset classes in 2014. Let's specifically focus on bonds. What do you think this tapering announcement coming from the Fed is going to mean for the bond market in 2014?
Well, John, as you know, we've spoken about before, we don't think it's the tapering that affects things. We think it's the cycles that affect things, and then the event comes along that people think that is what's causing it. So for the last 30 years, bonds basically have been on a buy signal, right? That from rates at 18 down to now, we think that's going the other way the next 30 years. So whatever the tapering's doing is not going to really affect that. Having said that, we're in a short-term buy signal for TLT. That's something we recommend our readers and those watching to write to the site and get our research. But basically, we think that bonds are going to be a great short for pretty much the next 3 decades.
So that's, you're obviously looking at the long-term picture here. When you say they're a buy in the short term, give us a little bit more insight on what you mean by that.
Yeah, well, we cover stocks, bonds, commodities, currencies based on our cycles, target, and other algorithms. And we have the TLT which is the 20-year bond fund. Long is near a cycle low. We're planning to go long on a close above 104.35 with a tight stop for a trade. So we still think bond prices are going to go up because rates are still going to have pressure. But longer term, sometime this year, that's going to change, probably mid-year or a little earlier.
Okay, so in the short term, as folks try to compare bonds versus equities, which one do you like better?
Well, short-term stocks still have a little more to go. We actually had a target today of 1820. We went long, believe it or not, at the beginning of 2009, after we went out the middle of 2008 before that craziness you might remember. So for the last 5 years, we've been more long than not. Obviously, now we're at the end. We think next year is going to be highly volatile, and we think stock top is in the second week in January.
All right, and what is really the main thing driving that volatility?
Again, it's the same thing. We think it's cycles, which come from the Greek word circle, which means equidistant top to tops in any data series. And so based on looking in the past to find equidistant tops in any data series, we're able to somewhat predict what's going to happen. We call the top at Apple. We call the top in gold, which I'm sure we'll talk about soon. And so the volatility index, the VIX, looks like it is going to be rather high going into this year. As a matter of fact, what we wrote today, pardon me, I didn't remember. Right now it's on a sell signal, but a close above 1520 is needed for a buy signal. So the VIX is actually down a little bit till next week.
All right, well, let's take a look at commodities and specifically precious metals, and even more specifically than that, let's look at gold. It's been on a little bit of a rally as of late, but started to take a little bit of a dive as well. How do you like gold coming up at 2014?
We think there will be moves, but the big move up, which we think is going to happen, is not going to start for at least a year and a half or so. You have to remember, we took everyone out of gold in 1900 after about a decade move up. And the last 2 years, more or less, it's been on a way down with bounces, which we've always said we've kept people out. We still think there's potentially more to go on the downside. And we have a downside target of around 1140 for gold and around 1670 for silver. So it's been painful for people that stayed in that didn't get out. But if they could hold longer term, it will go back to its highs and even surpass it. But inflation is not a problem right now, and we don't see it will be for a while.
Yeah, that always makes for a little bit of a wild ride. But as you said, maybe a good idea if you haven't gotten out of gold and silver and some other precious metals, maybe to hold on for the long term. David Gurwitz, thanks so much for being with us. Always a pleasure to have you.
Thank you, John.
And thank you for watching Money News on Newsmax TV.